Finally here, Martin Property Group with my weekly real estate market update. Hope you're having a great day. So this week in my article on martinlutzi.com.au, check it out there. Talk about the impact that 13th cash rate rise has had on the property market across Australia and locally here on the Sunshine Coast as well. Not all doom and gloom. We've certainly seen the prices slow, the property price growth anyway at least slow down, but it's still on the trajectory of being up. But at this time of the year, it's typical, people start to get into the festive season and Christmas mode, and there's less buyers out there in the marketplace. But I guarantee you this, the market's still good. There's still a lot of quality buyers looking for that perfect home. Now, we've seen down in Sydney and Melbourne an influx of properties come to the market. Auction numbers were at the second highest level all year in both Sydney and Melbourne and across Australia actually, but those two pockets are typically auction capitals. But it gives us a good indication of what's happening in the property market. So a number of properties were listed in those areas. New listings were well up, and total listings were well up too on this time last year in those two particular markets. Up here, a little bit of a different story. New listings and total listings are still well down and well under the averages. So there's less properties for sale and there's still buyers out there. Now, naturally, when you have that cash rate or interest rate rise, buyers will start to assess their situation, trying to understand what they can afford, what their borrowing capacity is, and assess what they can purchase. Now, that can take some time, particularly around Christmas and New Year's. I do believe this will rebound. There's still lots of demand there, particularly in our market here on the Sunshine Coast. Lots of demand for property and still a lack of properties to show these buyers. We've got buyers right now giving us a call daily saying, hey, what have you got? What do you got coming up? And there's simply not enough properties to show them. Yes, we have properties on the market, but you've got to find the right property for the right buyer, and that's a bit of a challenge. So look, there are buyers out there, and I believe this cycle, when we have that interest rate increase, buyers take a step back, take a breather. Sellers almost do the same as well, but that will build up and that will push through into the new year. So we'll see this rebound of buyer demand early on in the new year, I do believe. And that may see property prices grow again as well. I also believe that the RBA, as they do, they may have overreacted with the cash rate increases, now the 13th, and maybe don't want to cripple the economy. So we might see as early as maybe May, June next year, the RBA decide to bring back that cash rate and start easing back the interest rates. Now, if that happens, that could cause a bit of flurry activity as well. And I think it will happen next year. Could definitely be wrong, but I think we'll see that cash rate drop by about 1% before the end of next year. And the buyer demand, because we've got the migration numbers coming in and building approvals are still well down on what they need to be to keep up with that incoming demand. So that's my wrap again, guys, this week. It's Christmas next week. I'll chat again then and I'll do another update next week. But if I don't speak to you, have a Merry Christmas and a great New Year. And I hope it's safe and well for you and your family. And again, we'll talk soon.